Okay, we're live. So here we go. I'm going to do a quick review. I'll talk about some of the trades that we had. I execute these trades with the trade copier. So the trade copier that I use, it's a web-based trade copier platform, and it works on or for and on the MT4 platform. So it will only work if you're using the MT4 platform. But once you use my trade copier, you can turn off your computer, go on vacation, and anytime I execute a trade, it will automatically duplicate that trade. The trade copier it'll automatically duplicate that trade into your MT4 account. You don't have to do anything. So it's basically like me trading for you. So this was actually a trade that we had today. This was an interesting trade. So this was a continuation breakout trade for those of you who are following along with the videos, trying to learn some of my trading strategies. I share like exactly what it is that I do. So this is what I do on my own personal trading account. The strategies that I use, I developed. I put them together. I put together a trading system back in 2001. And I've been trading Forex, futures. I also trade Bitcoin and cryptocurrencies as well. But I've been trading for the last 18 years. And this trading system with these techniques on this video channel, the YouTube channel here, the Tech 1 trade, the HL30s, you've probably seen some of the videos, the continuation breakout trades. Those are the ones that I primarily use for a day trading. So a lot of times people say, okay, if I want to use your trade copier, how long can I expect some of these trades to be open? How many trades do you have open at one particular time? In other words, do you have multiple trades open at the same time? And then, what's the leverage that you're using? What kind of stop loss? So I talk about all of that in these videos. And here I'll talk about a couple of them with some of the trades, live trades that I executed with the trade copier. So again, when I execute a trade on my MT4 platform, my trade copier will, once you connect to my trade copier, it will automatically execute a trade and duplicate whatever it is that I do in your MT4 account. Now, one of the great things about this particular trade copier is that there's a lot of safety features for all of my subscribers who use my trade copier. So it's kind of like automated trade signals in a way. But of course, we call it a trade copier. Anyway, so there is a lot of safety features. I cannot see your trading account information. When you log in to connect your account, I don't see that. So this is, again, a web-based trade copier. I didn't create the software. It's a well-known, popular trade copier here. Actually, they're in the UK, but everybody uses it. I mean, almost everybody uses it. It's a really good copier. There's a lot of reporting. So all of the trades that I execute, you've got graphs and charts, and you can see the time in and time out, where I took my profits, how many lots, all of that. You get to see all of it. And then it shows you, and you can compare it to other strategies and things like that. It's a great reporting platform as well. So there's total transparency. Everything that I say that I do in these videos, you can see in the trade copier dashboard. And of course, you get the benefit of having those trades executed for you. I think I was talking about the trade copier itself. So there's a lot of security there. And I wanted to go a little bit further, meaning that to cover the stop loss issue, people ask me, what size stop loss do you use? Within my trading system, the largest stop loss that I will ever consider using is 55 pips. I will never exceed 55 pips. It doesn't matter what strategy it is. I will never exceed 55 pips. I put that into place for my trading system years ago. When I first put together my trading system, I didn't do it with the intention of selling it and to teach people. I was doing it to build my own trading account, make a lot of money for my family, and then start a private managed fund. I did that back in 2005. Prior to 2010, it was a lot easier to start managed funds. Right now, I just operate a small family fund. So the stop losses, the trades that I execute, the take profit levels, all of that, it's remained constant ever since, from way back 2001. I've never changed it. I don't go in because things don't work out and then I change my strategies. I stick to that. I stick to exactly what you see year after year. You're going to see these videos and I'm just going to repeat the same thing, because these patterns and these breakouts, these reversals, it's for the most part the way the market reacts to it, right? It's the way traders will react to support or resistance. It's the way traders on the breakout trades. It's the way traders will trade a breakout due to very often economic data, political events, elections, whatever the case is, even rumors, statements, things like that, even this week with Brexit. Comments there eventually are going to cause breakouts, things like that. So they're going to give me the opportunity. The system is built on solid market principles, is the way I phrase what it is that I'm really doing. And you would know that if you've followed and traded along. But again, if it seems like a vague topic or a vague explanation of what it is that I'm doing, what I mean by that is that, once again, I'm not using fad trading systems that people put together and they stop working after a little while, or they're noticing, small correlations and little patterns that they haven't really tested in a live market, or they just do some back testing. I went in and studied and understood. I had to understand what consolidation was when I put together this method. This continuation breakout trade. I needed to know what it was, because consolidation is very subjective. It's really difficult for a lot of people to see or identify key support and resistance levels. So that was one of my first steps in creating my trading system. Is I needed to master consolidation. I needed to understand what it was. How do you quantify consolidation? That was the main focus when I set out on my own to create my own trading strategy. And that is a really difficult concept for people who don't really know how to qualify or quantify consolidation. It's very difficult. Sometimes people look at maybe this high or that high, and they don't know which high or low they should use to identify that key breakout candle that then signals the trending move. So in this case today, with this dollar yen trade, this is the dollar yen 1 hour time frame. So with this particular strategy, again, the continuation breakout trade, I need to identify a range of consolidation and then wait for the signal candle. This was my signal candle. I don't get in the minute that candle closes. I need a 3 pip entry, which means that price needs to move 3 pips lower than the signal candle low. Sometimes I don't get that on the next candle. Sometimes it'll retrace and retest the level that it broke out of. And then it'll come back down, and later on, it'll give me that 3 pip entry, and then I just trade it down to the target. Now, with each one of my strategies, each one of these techniques that I use, I have a very precise entry, stop loss, and take profit, and I repeat it over and over again. When I developed this method and I calculated how far I could hold on to a trade after a breakout, I needed to go back in 2001, and I needed to look through all of these different websites that had, it was really limited back then, but some of the websites had information on daily average trading ranges. That's where I started. And then when I found when I was able to determine the right consolidation ranges that would signal a breakout, I started measuring the distances that these breakouts, the distance that price would move after a breakout. And I had to test it. I tested it with my own money, real live money. I don't recommend doing that when you're creating a trading account. Use a demo account or paper trade it. But I have to admit that for me personally, the impact of a loss, if I was using a demo, probably wouldn't have been the same as losing a few $1,000s on a trade. I was trading standard lots when I first started. I started off with quite a bit of money, and I was determined to make this work one way or the other. I had joined a lot of chat rooms in the beginning of my trading career, and these chat rooms were operated by inexperienced traders, and they should not have been calling out trades, and I lost a lot of money in there. So I had to go off on my own to figure this out. So there was a lot of testing. Once I figured out what consolidation was, then I figured out the breakout, then I figured out the 3 pip entry, then I had to figure out how long I could hold on to these trades, because sometimes I would be in these trades and I would be up, I would be profitable on the trade, but I would hold too long. I didn't know where to take profits. And then the whole thing would roll back against me, and I'd get stopped out, and I'd give back all of the profits. You've probably been there, or you might be experiencing that now. Maybe you're holding onto your trades too long. You don't know where to take profits. That's what you need to have in place before you start really taking your trading account to another level. I mean, it's just going to be hard to grow until you have a solid trading system that you can duplicate and it works. So these techniques, the continuation breakout trade, that is a strategy that puts me after the breakout. It puts me in the path of the trending move that develops after. Excuse me, afterwards. I've been talking since midnight. I have a private chat room that I also run. I'm in California, so right now it's about 4:45 in the evening, and I've been talking since midnight California time. So I'll wrap up here with this quick analysis to sort of give you an idea of what I'm going to be looking for during the Asian, London, and New York session leading into the close on Friday, and any setups that I might be executing with the trade copier. So the the continuation breakout trade puts me in the path of a trending move. The Tech 1 trade is a reversal pattern. So this all started today with this trade I executed with the trade copier, continuation breakout trade. It's a 55 pip target. Now I do scale out at the first 20 pips if I think it may not reach that 55 pip take profit level. And it doesn't mean that if I scale out or close the trade at the first 20 pips, it doesn't mean that I'm changing the plan. The plan means that I need to step back and take a look at my environment. So if you're using a trading system and you're just looking at the candle patterns and you're trying to get in and then you wonder why it's not working, sometimes you may not be looking at the overall bigger picture. I know what that's like because I did it. I started looking at my charts. I had this really myopic point of view. I was just looking at the candles right here. Maybe I was using a 5-minute, 15-minute, whatever time frame you're looking at, whatever time frame I was looking at back then. And I wasn't taking the time to step back and look at the larger time frames like the 4-hour, the daily chart. I wasn't aware of key support and resistance levels. I wasn't paying attention to last week's highs and lows. None of that mattered to me in the beginning of my trading career. I didn't know to take that information into account. Sometimes previous week's highs and lows don't matter because you might be in the middle of that range. So it really isn't going to have an impact. You need to look for something else. Other times it does have an effect. So I'm going to tighten up the charts and show you what we were trading today. You'll notice that this dotted line right here, that separates the start of a new week. That's Friday. That's the open for this week. So far we're here on Thursday, and this is everything that's happened on this 1-hour time frame for this week. And you'll notice that we're trading about the middle of the range from last week's low and this week's high. And I knew that when I was selling this, if I had a 55 pip take profit target based on this continuation breakout trade, which tells me that it would normally be a 55 pip target, the target is actually below last week's low. So I knew that if I was going to sell it, I was going to have to lock in some profits before it hits that low, because sometimes price acts just the way it did today. It will approach the support level and then pull away. And we can't always determine how close to support it's actually going to go before it turns around. Sometimes it'll stop right on the number. Sometimes it'll go through it and turn around and come back. And then other times it'll do just what it did today. So I need to lock in some profits. So that's why I was scaling out today on this trade as opposed to just holding for that 55 pip take profit level. If there wasn't any major support to really worry about and it was wide open down here and there was sufficient news that was going to push the pound dollar, besides the fact that most people have been looking at the pound, most traders. I mean, there's where we think for the most part the opportunity is. It moves in cycles, right? If we know that we've got this Brexit deal and everybody's talking about it, and you turn on CNBC and they're talking about it, you turn on Bloomberg and they're talking about it, everybody's talking about it. So traders are going to start moving and shifting their focus over to the pound or pound crosses to look for an opportunity there. Very often you can get these big moves just like we did last night. So it may be that, and this is what I was thinking today as I was trading this, you have to be aware of your surroundings. It may be that if I want to trade the dollar yen, I have to prepare for slower price movement. In other words, less participation, and price may not move with extreme velocity or volume or conviction to that 55 pip take profit in addition to last week's low. There's a lot of things going on here that I needed to take into consideration. So again, that's why I was scaling out of the trade. Now, when it was approaching, so this will give you an idea. If you're considering using my trade copier service, this will give you an idea of how long some of the trades are open. So I opened this trade yesterday and we were in the trade about 24 hours or 18 hours or something like that. I mean, these are all 1-hour candles, and you can see from the time I got into the trade, I had to wait for the pullback. And when the pullback occurred, I was well aware that all it was just a retest of the support level that it broke out of. And that is a common pattern that happens over and over again. As a matter of fact, it's healthy and it actually confirms the move that I'm in to the downside. As long as these continue to make lower lows and lower highs, I'm good. It was when I closed out my position that it reversed, and I was well aware that it was probably going to do exactly what it did here. Again, I'm no genius. It's just that I've been trading for 18 years and I see this pattern and I know how it's going to react. I know, and I took into consideration everything that was going on this week and where the focus is most likely going to be during this time. And I knew that price doesn't have to hit support before it turns around and rolls back the other direction. We're running into a major psychological level, the 113.00. Again, it didn't hit it on the number, but it came close. And price moves just like this. I have to prepare for that. So what I did is I switched to a 30-minute chart. I switched to a 30-minute chart now, and I'm going to show you what I did here. So as price is approaching the 21, which was my first target, one of the things that I say is that I prefer to day trade and manually open and close my trades. It doesn't matter to me. I've gone through so many different experiences over the last 18 years where I set in a take profit level, I walk away, I leave my office, I come back a few hours later, and I end up stopped out. And sometimes I look at the chart and I think, okay, well, it went maybe two tenths of a pip away from my take profit level, but my broker didn't fill it. And then I can go to another chart and I can see that it went 2 pips lower than that on another platform with another broker. So you start wondering, is there a little broker manipulation going on there? Well, back in the day, 2001, 2002, 2003, that happened quite a bit, as you can imagine. It still happens today with some brokers, but not as much as it did back then. So regardless, I learned my lesson. There's no way I'm going to trade what is my family's money for the most part, right? I'm here to make money, to put food on the table, to make profits every day, every week, every month. I have to send home money to pay the bills. I need to manually watch these trades. So if you're using my trade copier, you can rest assured that I'm doing the same thing for you. My trade copier duplicates everything that I'm doing. So I'm hands-on as it's approaching that 21 target, the 113.21. I was aware that if I switch to a 30-minute candle, very often with some of these candles, especially when it's approaching a key support or resistance level, and I'm not saying it happens all the time, but very often, you can sit and watch these candles. And as these candles are about to close, the last couple of minutes of, let's say, a 30-minute candle, I will see price moving down a little bit further if it's moving in a downward direction or whichever direction you're trading it in. And you can squeeze out a little more profit out of the trade. And I was aware that if this candle, let's say this candle opened at 9 and closed at 9:30, the next candle, the green candle, opens at 9:30 and closes at 10. I was aware that it was probably going to print something that would look like a hammer on a 1-hour time frame, and that's why I switched to a 30-minute. I knew I was going to hold it until that 30-minute candle closed, or I'm sorry, it was about to close. And then I locked in profits here at 11. I think it went as low as 9. It went as low as 9, just about 10 on this platform. If I switch to a 1-hour chart, you can see the hammer that it printed. And then it just retested it one more time, but at that point I was flat. So again, there's a lot of things going on with this one. Normally it would be a 55 pip take profit target on this, but there was a lot of support that we were running into and a lot of things going on why I needed to not change the plan, but the plan also requires that if it's a little more, if the environment isn't creating an optimum move for me to expect the 55 pip take profit, I have to scale out at the first 20. But I can take more if I'm there actively managing the trade. I could have easily set into my trading platform for the trade to close at 21, but I knew it was going to move. That's, again, why I'm managing these trades. I'm hands-on. I know that I can get more out of the trade. And I don't trust brokers. It's my money. It's your money. I'm trading for you when you use a trade copier. I know that I need to make as much money as I can out of these trades and anticipate the worst case, right? It could be maybe the brokers just don't fill the order if I walk away from it. There's no way I'm going to walk away from a trade. And I live my whole life around trading Monday through Friday. I've created the environment after 18 years with my family. You know, everybody knows that this is what I do and this is how I trade. I'm just not going to take my hands off these trades. Sometimes I get stuck in these trades where it's overnight. I have to manage them. Obviously, I'm going to take rest, right? I'm going to step away from the computer. I'm going to be alerted. I've got laptops around the house, so tablets, phone, all of that, just like most of you do. You know, you don't want to walk away from your trades. I really don't like walking away from my trades. That's just how I do it. So this one worked out just fine. The other trade that I'm looking for, so let's move forward right now. I want to click that so it stays there. Another trade that I'm looking for a possible breakout on is the euro dollar. So the euro dollar, it's, for the most part, in my opinion, it's been a little choppy and sideways. And again, this comes back to that understanding the market psychology, understanding that things move in cycles. When there's a lot of activity that's going to have, let's say, for example, an impact or a lot of interest in the UK and the pound, you know, what's going to happen? What's going to happen with a vote? What's going to happen with an election? What's going to happen with Brexit? We want the opportunity to trade. We know that these situations, these scenarios can create opportunities to make a lot of money. So the focus is going to go somewhere else. And some of these other currencies, like the dollar yen or the euro dollar, are likely to move a little slower. I'm not saying that they won't move with the rest of the market, but what I'm saying is it's a little more, the ranges are smaller and there are fewer participants here for the most part. And that's why I was getting a lot of this choppy movement along the way. So I started off looking, if you're following along with the continuation breakout trade, I have to box in a range of consolidation to identify the breakout candle. That's what I'm doing. That's how it starts. And very often in the initial stages of consolidation, I need to move things around. So initially, I had my resistance point up here. We had this week's low. I had my resistance with the opening right there at the opening, start of the week. It created two tweezer, sort of 1 hour candle, kind of stuck right there. So that's where I stuck my resistance point. At that point, that was all I had. That was all the data I had. I had this week's high. That's what I was looking at. And then this week's low. And I know that when a candle closes outside of this range, if it doesn't line up or I don't have 100% confirmation with these three indicators, then I can't take the trade and it may turn into a head fake, a reversal. Later on, we had a candle that actually closed above that resistance point, but the indicators were not confirming here. On a close completed breakout candle, the Bollinger Bands absolutely have to be separating away from each other, and they're not on this candle. The bottom one is almost pointing up, and so is the top one. This would indicate to me a possible reversal, a head fake. And that's one of the things. So I've got three methods to determine if a breakout candle could turn into a head fake. So I use this strategy so much that not only was I able to figure out the entry and the stops and the targets, but I was able to figure out how to improve the odds, right? I wanted to eliminate the failed trades. So I kept working at it, and kept figuring out ways and filters that I could apply to these trades when I get these signals to determine, is it likely to trend and move higher after the breakout? Or is it likely to turn around and come back down inside a consolidation? Should I just stay away from it? And you'll notice that with this one, it kind of bounced around and went right back down inside a consolidation. Depending on the size stop that you use, you could have been stopped out. I mean, I stayed away from it anyway. And I know that this choppy behavior is going to happen. This happened actually last week. We were trading the U.S. Elections. We had some small trades. This is the range right in here. And you just got to be careful. You got to be aware of the conditions. You got to be aware of what it is that you're trading, how traders are likely to react to the news. In a situation like with an election like this, and I was talking about it last week, we need to be aware of our surroundings. We need to know what it is that we're trading. It's not like an economic report where the report is released to the news and then that's it. It's set in stone. We know what the numbers are. There's no mistaking. There's no revisions. We can trade that number. If it surprises the market, we know that there's likely to be some kind of a move. The elections were not like that. The elections were an opportunity, but we needed to prepare that as each hour was going by, we were going to get updates to the election. We were going to get news that might be in favor in one direction that would affect the euro dollar and another direction that would affect it in the opposite direction. So as time goes on with events like an election or something like that, where you're getting more data throughout the few hours, whether it's during the day or night, when you're getting more data, you're more likely to see this type of choppy behavior. So if you're going to get into some of these trades, you can't hope for a breakout just yet, right? It's not a solidified decision at that point. With these solidified decisions where we get a yes or no, or here's the number and that's it, where it's set and we know what it is, that's when we're likely to see a continued move. For example, non-farm payrolls. When you look at non-farm payrolls, taking into consideration possible revisions, things like that, if it is and it surprises the market and you get a breakout, very often you're going to get a trending move right after. So it just to give you a comparison that, you got to be aware of what it is that you're trading and how traders could likely react to it. So later on, I'll just go right to the candle earlier today. I had to make an adjustment again to the resistance point. And at that point, here was my resistance right there at 1.1351 with a low of 1.1215. For those of you who are trying to get a better understanding of this breakout strategy, If the consolidation range is too small, let's say 30 pips from the high to the low, and you get a candle that breaks out of that range, it could likely lead to a head fake. So again, it needs to be an appropriate range, a distance from that high to that low. Otherwise, they could also lead into head fakes. So at this point, we have a candle that's broken out of that range. The indicators, the Bollinger Bands are separating away from each other, but not really showing a solid sign of strength. It's possible that it could go up one more time and push higher. I'm not going to trade it right into that resistance until I know what's going on and what's driving it. It may take until the London session. So I'm going to switch to a 30-minute chart because right about this time, I start looking for the possibility of trading the HL30. So on my YouTube channel, you may have seen charts that look like this. They have a blue background. When you see a video or you see my charts that have a blue background like this, here I'm exclusively looking for an opportunity to trade the HL30 strategy. The HL30 strategy is another technique that I developed, and I just execute it on the 30-minute time frame. I use one indicator. It's just a reversal. All I'm doing is trading off of the previous day's high and low. When I trade it on the majors, like the euro dollar, the pound dollar, the dollar Swiss, and the dollar yen, I use a 20-pip target and a 20-pip stop. That's it. If I can scale out of the trade and it hits the first 20-pip target, I take another 20-pip target because very often that trend will resume and continue. Right now, and there's obviously criteria that needs to be in place. So there's things that need to be, there's components to this trade, not just trading off of the previous day's high. There has to be some kind of a trend as well. This has been inside of consolidation, and I showed you that on the 1 hour time frame a moment ago. If it remains inside of consolidation for quite a while, I most likely will not trade an HL30 because that's when they're likely to fail, because eventually they're going to break out and go the opposite direction and I'd get stopped out. So I'm looking at the same time for some of these solid confirmed setups, but I'm also looking for the possibility that these trades could fail in certain instances. And I need to identify that with some of these filters that I applied to these trades. If there's the chance that I'm looking at a trade and I see some of the confirmation, but I think to myself, it looks like it could work, but at the same time, it looks like it might not work. The minute I think that, I'm done. I stop. I know that that's not an easy thing to do because the first year of my trading career, I remember thinking that a lot. You probably think that too if you just started trading and you don't have a system in place. You might be thinking, it looks like it'll work. Last time I tried it, it worked, so I'll try it this time. And then it doesn't work. That to me is a situation where if I don't have 100% confirmation, I need to stop. I just need to stop. It's not making sense to me. It's not lining up. It doesn't look the way I need it to. Me personally, the way I look at the charts, what I'm looking for, the way I trade these strategies, everything that needs to line up. If it's not giving me 100% confirmation and it doesn't look right, I absolutely have to stay away from it. It's true that it could work, but it's also very, very likely to not work. And then I would be trading something that I don't understand. And that wouldn't be fair to me, right? If on my family, if I'm trading, trying to put food on the table, and it wouldn't be fair to my subscribers or you, if you're using my service, for me to start trading situations and price movement that I don't understand. It doesn't make any sense to me. That happens a lot, right? There isn't one trader that knows every single trading strategy and knows every reason why price is moving every tick all the time. It just doesn't work that way. As professional traders, we're waiting for, so we've figured out our edge, we've figured out our system and the way we are comfortable trading. We've blended all of that into an opportunity for us. And if we can't find that opportunity, then we got to stay out of the market. Otherwise, we're doing things that we just don't understand. And then we lose control of the trade. We don't know where to take profits. We don't know where to put our stop. If we trade our strategy and we know where our stop is and our targets, that I can duplicate over and over again. And that I can control. So it's about me, my personal self-control. Very often you'll hear me saying in some of these videos, I want to be right 100% of the time. I need to explain what I mean by that, because sometimes I'll say that to somebody who doesn't really know me, and they'll think, well, how long have you been trading? You can't be right 100% of the time, right? It sounds kind of like something that an inexperienced trader would say. What I mean by that is not that I know I'm going to be right 100% of the time. I know I'm going to have some failed trades. But what I mean by that is I want perfect execution based on the trading strategy that I developed that I know works. So it's all about me having personal control, self-control, discipline in executing the trade, getting in at the right location, letting price move to its expected take profit target, and honoring that stop loss, not changing it. Of course, unless everything's breaking down and I miscalculated something and I need to get out of the trade. So it's all about me controlling my behavior. The more I approach my trading every day with the attitude that I want to be right 100% of the time, not that I want to make 50, 60, or 70 pips. I tried that. That was originally my goal in the beginning, but I didn't even have a trading system in place. So every time I sat down at the table, at the desk to try to execute trades and make money, I would write down, I want to make 60 pips, but I would experience losses. So I would start the next day negative. So in order for me to make 60 pips the following day, I had to make back what I lost the first time, the first day. You get my point. And I just kept, so my focus was wrong and I kept getting more and more negative. Focus on your behavior. Focus on your execution. You can only do that when you have a proven trading system in place anyway. If you don't, you have to have a proven trading system in place. Then focus in on your behavior and your personal execution, your ability to control your environment and execute that trade the way you're supposed to, and ignore everything else. The thing that's kept me in this business for 18 years is that I exercise that high level of discipline where I can see price sometimes during the day moving. And yeah, I want to make money. I want to make money all the time, but I know that I can't make money all the time. That's not realistic in trading. You can't make money all of the time. You can't make money on every single move that you see. It's just not possible. There's going to be things that happen that you don't understand. And if you don't understand it, you shouldn't be trading it. I know that it's, it's tempting to try if you see price movement and it's covering a pretty big distance and you don't understand it. It's tempting to try it. But how often have you seen price move when you don't know why and you don't have a setup, and then you jump in, but you don't know where to take profits, and then you hold on too long and it comes back, goes against you, and you get stopped out and you wish you would have never taken it. So again, it's just about me exercising that personal self-control, discipline, exercising and executing these trades only when I'm supposed to. That's exactly what my subscribers that use the trade copier, that's the advantage that they're getting, is they're getting somebody who's controlling these trades. It's not a black box automated system that's just firing off trades and nobody's confirming them. I'm executing and managing and looking at each one of these trades. It's critical. That's what helped me grow and build my trading account to the point where I can live off of my trading and feed my family, take care of my family, and provide a future for everybody. I have a big family. So I trade every day. I can't, I find it really hard to turn my back on trades anyway, but I love it. I mean, that's the reason why. It's, I know that my family's counting on me, but I really, really enjoy the process of trading, following along with the news, watching, and the whole experience, understanding what everybody else is doing, digging for this information, all of it. I just enjoy the whole process. I'm not really comfortable right now with the idea of trading off of yesterday's high as an HL30. It's nowhere near the ranges that it has to qualify for an HL30. Before it even qualifies for an HL30, price has to go back up and retest yesterday's high within 10 pips. And it cannot exceed yesterday's high by 10 pips. If it falls short of 10 pips of yesterday's high, then it won't qualify. If it reverses, it's not to say that I can't sell it. It would just be a different strategy. That would be something like a Tech 1 trade that I developed. If it exceeds 10 pips above yesterday's high, again, it won't be an HL30, so I can't use those parameters with that 20 pip stop, 20 pip target. But it could be a reversal, like a T2 pattern, which is a major reversal, and I would trade it if I get that opportunity. Right now, I don't know that that's even going to happen, so I'm just going to have to wait and watch it. I have some price alerts so that if it starts to move up towards that 10 pip range, I would be notified of that, and then I would look for an opportunity. So I'm going to go to the pound dollar. The pound dollar is a little bit different, right? We saw this move yesterday after the resignation reports and everything to the downside. I did receive some questions today if I'm going to consider trading at HL30 or what I think it would look like. I really don't know. I mean, my personal opinion here about Brexit and everything that's happening is the individuals who are involved in making this decision in the UK, they're not going to stop. They're not going to stop just because things fell apart today and that's it. And everything's just going to be negative for the pound. They're going to go back to work and see if they can't salvage something or put together a better package or a better deal or whatever it is that we're trading. This is not over with just yet. So there could be rumors and could be statements of, maybe some more activity, something that they're working on, something that they're doing that could be pound dollar positive, and then the whole thing will just bounce straight up. But this price is nowhere near yesterday's low within that 10 pip range for me to classify it as a potential HL30. It could later on throughout the Asian session, it could move around a little bit and then turn around and come back down, test yesterday's low, and then form that HL30. That might be an opportunity. There are times when I sit and wait until after the rollover. And by the way, I have to wait for the rollover period anyway to start even marking off my charts like this to look for the HL30, because I have to use yesterday's high and low. So I have to wait for the rollover. But very often, I won't get an HL30 set up until the New York session. And sometimes, you know, you would think that you would get it during the Asian or London, but that's not necessarily the case. It could be that I just have to wait. I've even traded the HL30 perfectly with non-farm payrolls. Sometimes non-farm payrolls is stuck in a really tight range, and the reaction just pushes it up towards, let's say, for instance, yesterday's high, and then it reverses on the 30-minute chart, and I get that reversal candle pattern, and I trade it for a quick 20 pips. And if I can scale out maybe to an additional 20 pips for a total of 40, something like that. But sometimes that's all you get with non-farm payrolls. Sometimes it doesn't really break out and doesn't trend. So something to keep in mind. If price comes back up, I don't know that it will, but if it did, for example, and it was to retest this high, Thursday's high, I would not sell it as an HL30. It could work, but it probably won't, because very often with high for the week right here, or a high 1 or 2 days back, very often if it forms a reversal at yesterday's high, it could turn around and go back up and retest the overall high and then come back down. That would stop me out with that 20 pip stop. So I wouldn't trade it as an HL30 here. I would wait for it to just approach resistance for this week and then look for a reversal candle pattern, which is not an HL30. I can't use a 20 pip stop and a 20 pip target. They're different targets. So that would be a different strategy altogether. So I don't see a trade setting up here on the euro dollar just yet as far as the HL30, and I don't see an HL30 setting up on the pound dollar just yet. Going over here to the dollar yen, I've got yesterday's low, and then I have yesterday's high sitting right about here. What is that high exactly? I've got 70 here on this chart. This high has gone up as high as 61. So that's actually within the 10 pip range. I might consider an HL30 here. I have to look at the indicators here. So if I do consider an HL30 there, I would execute that with the trade copier. And then we have the euro yen. Let's see if I can get that in here. There we go. Euro yen, I would not trade an HL30 here because with the HL30 on the euro yen or the pound yen, they can cover a greater distance, and I can't use that 20 pip stop loss. If I use the HL30 on the euro yen or the pound yen, it's going to be a 40 pip stop and a 40 pip target. So you can see that that would be double, obviously, the return, but also double the risk. So I'm probably just going to focus in on the 4 majors and then ignore the yen crosses. And it's not to say that I won't trade a reversal. It's just that I'm not going to trade an HL30 in here. This is just choppy. You can see, for example, almost the same thing that I was talking about in the previous chart. You know, here is yesterday's high. And then if we go back 1 day further, we've got that overall high. So if it was to reverse here, it could turn around and go back up one more time, retest that, and then drop, if that's what it does. Sometimes that will happen with the HL30. So it's almost like you're shorting it prematurely and using a small stop, you get stopped out, and then it turns around and comes back, and that's what I try to stay away from. So that's pretty much it for this update here. I'm just trying to give you an idea of what I'm going to be looking at during the Asian and London session. If I get some breakouts on the euro dollar or something to that effect during the New York session tomorrow, I'm definitely going to trade it. I don't know if we're going to get any 55 pip breakout moves. If we do, I'm certainly going to take them. I don't know if we're going to get an HL30 just yet or reversals, but again, if I see them, I will take them. So I hope that this presentation here gives you an idea of, you know, how I trade, my style, what I'm looking for, some of the patterns. My techniques are mostly technical, but I do incorporate all economic, fundamental, political data that I can. I mean, I take into consideration all of that. I'm always aware of the conditions. I'm always aware of and asking, why is price moving? I need to see the news. I need to know what's driving price, especially if it's a breakout. If it's breaking out of a range of consolidation and I can see that it's a strong candle, I'm not going to trade it just because I see the candle. I need to know why, so I can confirm with that news or the reason why the breakout to make sure I'm trading along with everybody else. I don't want to be the only guy trading a breakout when everybody else is about to, you know, sell it and reverse. I'm going to get stopped out quickly. I need to know why it's breaking out. If it's a false statement or rumor, I'm probably going to stay away from it. You know, if we get that every once in a while, we get that I was talking about it just this morning. We were talking about how Obama, when he was in office, it affected the market when we were trading a few years ago. And there was a rumor that hit the internet, and it was about a comment that they said Obama made on the US dollar. And it caused a pretty decent move in Forex. And later on that day, he was making a presentation, a statement, a small speech. And he started off, he sort of stopped his presentation before he started. And he goes, I just want to make a statement here that I didn't make any comments about the US dollar, and I wouldn't do that. So you can see that sometimes there's going to be false rumors, false information. Sometimes, I mean, who knows who's behind that, right? Some of these guys are going to capitalize on these short-term opportunities. That happened during the European crisis, right, with Greece. There was a rumor back in 2015, right at 9 o'clock, there was a rumor that an official in Greece made a statement, and it affected the euro dollar. It dropped hard. And there was some reporters, I guess, that called that office, asked to speak to that individual, to ask him questions about the statement that he made. And he said, I didn't make that statement. I didn't say that. So they went back, posted it on the internet, it was about 10 or 15 minutes later. They posted it on the internet saying that it was a totally false, it was just basically a lie. And the euro dollar turned around and went right back up the opposite direction. So the people behind something like that are going to take advantage of it. They're going to get in, they're going to get out fast. Who knows how much money they put behind a trade like that? I would imagine quite a bit. And I never hear later on that anybody gets caught for stuff like that. So I'm not saying do it. I would never consider doing anything like that. But what I'm saying is sometimes that stuff happens, and we have to be prepared for it. And again, that's why I'm hands-on. I'm well aware when I see price moving, I need to know why, and I need to be able to confirm it. Otherwise, I'm not going to take the trade. There's going to be so many opportunities to take trades and make money. I haven't had any losing trades in a long time. I want to continue that. I know I'm going to have a losing trade eventually. But the fact that I'm trying to be right 100% of the time according to my system and control my behavior means that if I do experience a loss, I can earn the loss back on the very next trade or two. And then I just keep moving on forward. And that's what allows for growth like that. Again, if you got any questions, you can send me some emails, or you can ask me some questions here in the YouTube channel. I'm going to try to post regular updates like this from now on. Took me a little while to figure out how to use this this YouTube live presentation, but hopefully it'll give some people that are considering using my trade copier, a little more insight into, again, how I trade, the techniques and strategies that I'm using. Thanks. I hope you guys have a good trading day on Friday.